We'll start on the economy. That's all everyone's talking about. The president set to deliver remarks at the Economic Club of D.C. this afternoon and is expected to tout low unemployment and lower inflation as the Fed cuts rates. Council of Economic Advisors Chairman Jared Bernstein joins us now from the White House. It's great to have you. Welcome.
Nice to be with you.
So what do we expect the president to say? I've seen this billed as a victory lap of sorts.
No victory lap, and he'll be explicit about that, but he's going to start very much from where you guys just started. The fact that we have lower interest rates, lower inflation, amidst strong GDP growth, rising employment, low unemployment, and rising real incomes and real wages, that is marking a very important moment in the American economy. Lower interest rates translating to lower loans for mortgages, for cars, for credit cards, for people who want to invest in small business, where we've seen record small business starts. All of these, as Chair Powell might say, the direction of travel is a positive one, but no victory lap. Our work isn't done. We still have a lot more to do, especially when it comes to cost reduction.
Did you know that the Fed we knew that the Fed was going to cut rates. Did you know that the Fed was going to cut by double? Because it seems a little political to talk about the Fed rate cut for the president.
Well, no. Of course, we didn't know what the Fed was going to do until 2 o'clock when I was repeatedly refreshing my browser the same way I'm sure you and everybody else was. But look, what the president's going to talk about today is nowhere close to monetary policy. We respect the independence of the Fed, and not only will he reiterate that in his speech, but he will point out how well that has worked. The independence, that respect for the Fed's independence is such an important piece of giving them the leeway they need to do what they see fit. We know that the historical record is littered with economies that have been brought to their knees from inflationary pressures, from disrespecting the Fed's independence, something we associate a lot more with our predecessor. So this is much more of a take on how how this progress plays out from the perspective of what the president cares most about: middle-income families, families like the one he grew up in.
Clearly, though, the Fed is worried about the labor market, even if they're framing this as a recalibration. And look, if the economy is so strong and the labor market was so good, they wouldn't have to go 50 basis points, would they?
No, I don't agree with that assessment, and I don't have the quote in front of me, but yesterday Chair Powell said something to the effect of the economy is looking strong, GDP, many of the same indicators I just ticked off, and I'm quite certain he used the word solid to describe the labor market. Look, the employment gains we've seen are certainly within the range of what economists call break-even levels, which is the level you need job growth to be so that the unemployment rate remains relatively stable. And while that unemployment rate has ticked up because hiring has slowed, we haven't seen anything like an increase in permanent layoffs that are very much associated with a deteriorating labor market. We don't see that. We still see solid vacancies, solid but slower hiring, and an unemployment rate that is low in historical terms. In fact, close to what the CBO tells us is the full unemployment rate.
Jared, the conversation of the rate cut always leads immediately to housing and whether or not these lower mortgage rates are going to stimulate some reversal of the lock-in effect. I wonder, the president, obviously housing was a huge priority for him for the past 4 years. I wonder how much progress he has made relative to what he thought he would be able to do when he came in.
We've certainly made progress there in lowering housing costs. I mean, if you go back to the American Rescue Plan, you saw a real downtick in evictions. In fact, evictions were a really small problem relative to what was expected, and that is directly linked to interventions in the rescue plan. I can tell you that in December of 2020, we were meeting with the incoming president to talk about plans to make sure people could stay in their homes. Well, when it comes to really making a difference in the 15-year development of the shortage of affordable housing in this economy, we have a market failure there. It is a big piece of unfinished business here. We can't do it ourselves. Biden and Harris both have plans to add 2 to 3 million units of affordable housing, both rental and owned homes, to the market, making a big difference in that supply shortfall. We can't do it by ourselves. Congress has to work with us. This is not a red or blue issue. This is an American issue.